Welcome to the Trading Zone. I am Joe T. Gay. Brian, how you doing? Have a good weekend?
Yeah, great. Just getting myself all together here after Super Bowl Sunday. It's everybody's always probably dragging on a Monday morning. Why don't they make this game on Saturday night? I don't get it.
Yeah, or why don't they push it back a week and have it with President's Day, have a Monday off? Or I don't know. Things could be a lot smoother. This should be a holiday, I think. But yeah.
Anyways, complain all we want. You can only control what you can control, right, Joe? Today we got a great show. Markets are up early this morning on a Monday, despite tariffs being placed by Trump on the steel and aluminum industry. Also, word that more tariffs are coming this week, which kind of freaked the market out a little bit on Friday. So, should be kind of an interesting thing going on here. The bull market kind of continues, right, Joe?
Keeping on. For me, it's all about interest rates. I can't wait to get into it. I think it's been a great show. Sorry, got a new camera this week. I don't know if you can tell. I'm just looking at myself on screen. It's not the best thing to do. Just trying to fix this, get it all straight. Thank you guys for everybody for joining. It's really good to be here every Monday. We're going to talk about the market. We're going to talk about volatility. We're going to talk about technology and AI. Got a big trade. If you stick around to the end of the show, we're going to do the trade desk, Brian. Kind of under the radar. Maybe people think AI, they're thinking NVIDIA, maybe they're thinking software. I kind of think where the AI is going to be most immediately felt is in advertising. So that's where I'm looking at trade desk. I think it's going to be interesting to see how that comes out. They have earnings coming out on Wednesday, so I want to see how that goes.
That'll be an interesting play. So obviously we'll get that in for the trade of the week. And just new now, if you're tuning in, go check out equityarmorinvestments.com. We have a new subscription agreement with people so that you can come on and you can follow us along with Joe and I's trades. I think we've done a pretty good job, right, Joe? Not to brag a little bit, but yeah, you can go to equityarmorinvestments.com, click on the Trading Zone section, subscribe now. And we have some really cool discount offerings coming later today, actually, where you can, if you buy your first month of subscription, you get the next 4 months free with all 3 trading ideas. So tune in and watch that. But in the meantime, Joe, why don't we get into
let's hop into it. Yeah, let's get to it. Let's start the show here. No question about it. The market's kind of reacting in a big way to these headlines, hearing about the Elon Musk stuff, got the Doge stuff. Some people thought this was a scary headline. Some people thought, I'm not really sure what to make of it. But Trump saying, maybe the U.S. has less debt than we actually thought. I don't really know what this means. For me, this is just going to file it under just wait and see.
Less debt than what we thought. I mean, I guess it doesn't matter, right? You're in the trillions, so it is whatever.
Yeah, really. We got more tariffs coming through this week. Wait and see. Is this just going to be some of this chop? I want to get into this in a second here, Brian, for sure. We got bonds. This is going to be the big story for me. They had a big rally, of course, to start the year. Kind of in no man's land here. What are we doing with interest rates? Are we going up? Are we going down? For me, this is really, really big. This is going to be the market story right here for this year, and we're going to get into this week. This week we got the CPI data. This is going to be critical for me. Are we going to have the usual March swoon or the March pullback in the market? End of February to March, is that going to happen, or are we going to just push on through, race to new all-time highs? I got some good charts to look at. I want to check that out as we go.
I think that let's take a look at this chart real quick though, because you mentioned interest rates in the 10-year, because really. We got the unemployment report last week. It came out 4% unemployment, which is a bullish economy, right? We talked about months ago, if unemployment rate stayed low in this kind of environment, we were going to get a big move off the market back in October. And was it going to be 60% down or 60% up? And if we said unemployment rate stays low, that, trend was to the upside here. And you look at the 10-year note in reaction to a 4% unemployment rate, it is still broken down. I think you almost could draw a line like cutting off, like almost a head and shoulders kind of toppy formation here. I'd be looking really at the 4.5%, 4.6% level on the 10-year. As long as it stays below there, we've talked about this too before on our show, Joe, that this is very bullish for NASDAQ techie kind of growth stocks, for rates to sort of back off their highs. So we'll see if that can continue. I'd really would want to be watching that level on the 10-year, 4.5 to 4.6. Stay below there, and I think the bull market is intact.
Well, we'll get into it. I think that was a good recap. Let's get into the show here, Brian. So welcome back, everybody. Welcome to the Trading Zone. We got to have a big week ahead. I'm Joe Teague, portfolio manager of Equity Armor Investments. With me, as always, is
right here, Brian Stutland, also portfolio manager, Equity Armor Investments. Joe and I, every week here on the Trading Zone, give not only our view on the market, we talk about volatility, we talk about the S&P 500, we give our macro trend ideas, and most importantly, at the end, we give a trading idea of our own that's been fairly successful over the last few months here. So, Joe, why don't we get into it right away here on the week ahead? Some kind of key events,
busy
obviously
week
CPI,
ahead
PPI,
for
right?
sure. We're through most of the big heavyweights in the tech earnings cycle. The big enchilada still to come. NVIDIA is going to be coming later in the month. This week, not a lot as far as earnings goes. I'm watching Palo Alto. That's going to be a big one for me. And also the trade desk is coming out. We're going to trade that at the end of the show. Stick around for that. Big economic data, though. We got CPI and we got PPI. Also this week, we got Jerome Powell testifying to Congress. So that could be market moving too. So there's going to be a lot of movements going this week. This year has been known for just headlines massively moving the market back and forth. So we're going to get some headlines this week. I want to see some price confirmation, though, before really changing my mind. There's some good opportunity for scalps, though, along the way. Brian, we always look at this. This is the skew. This is our key leading indicator for the VIX index of volatility of the volatility, of course. It's kind of in no man's land here in the skew. I want to see, just like the S&P 500, just a new high here would tell me, hey, volatility is heading higher here, or a new low down here that would give me some confidence volatility is going to stay lower. So kind of in no man's land, just waiting and seeing here on volatility. Are we out of the woods yet on all these news yet? I'm not so sure about that. I think we're going to have a news cycle that persists throughout the rest of this year, but it should be interesting.
Yeah, I think, remember the skew index, folks, is the demand for a downside put in the S&P 500. That's an insurance contract to protect yourself from the downside or make a short bet on the market versus the upside call. So the higher this skew is, the more demand there are for puts. And you can see Joe, put in this green line trend here where it just seems like anytime there's some bullish activity in the market, institutional hedgers are coming in the S&P and trying to buy some puts for protection, which is kind of interesting because we're kind of making sort of higher lows in this trend here, which leads me to believe that we are going to have some volatility shakeout maybe later this year.
Yeah, also in the volatility world, we got these VIX futures here. VIX futures have come down a lot just in the past week. Pretty fascinating to see. We had this really high expectation last week. Nothing really happened. Now we're kind of settling in, and the futures curve is looking a lot more like its normal shape here. We have the spot cash below the front month, below month 2, below month 3. That's very typical what we see for the VIX. That's what we've been expecting to see for some time. And so now we're just kind of wait and see mode. It could go either way right here. This is typical action. Again, we're in interesting times. Brian, you seeing anything special in this VIX futures curve?
Well, we talked about this last week when it got to sort of the high end of this, that there was so much, VIX futures are mean reverting. VIX volatility is mean reverting in the market, meaning it tends to sort of track around the same area. And there was a lot of pressure from weeks and months ago where volatility futures were lower. So I think the little bit of mini spike we had was just that, because we had some pressure back to the downside. We've gotten back into that mid-range area now. So I think we're kind of at fair value. I think if VIX futures trend lower from here, maybe I'd start to look to be a buyer. If they spike higher, I'd probably look to be, somewhat of a seller. So that's kind of how I'm looking at it. Kind of making a market around this level here is treating this like this is my fair value right now. So I don't have a bet either way in a direction on this, but I'm just kind of watching to see where they move off these levels.
Yeah, so I would say the market's kind of trading between ranges, and volatility is too. One thing that I'm watching, though, I brought this up for a few weeks in a row now, is just this massive move in these investor sentiment. The start of the year, Brian, we were all the way down here, 40% bearish, 25% bullish. That was actually a sign that, hey, maybe the market's, there's too much fear in the market. It's a good time to buy. And it flipped in just a week all the way there. And then now we're back we're back at the totally bearish sentiment again. And this to me is just a sign that the market is just doing this up and down, following to every single headline. And this might just be a lesson for 2025. We're going to get a lot of headlines, and we don't need to think that, every single headline is 100% true. Everything, a single headline is fully bullish or fully bearish one way or the other. I think we're going to need to watch the charts, and I'll be getting into that. I think there's some key levels to watch in the S&P 500.
Yeah, I think basically what you're saying is there's some opportunity to scalp the market back and forth, be a trader to some degree on a portion of a portfolio, and look for some opportunity to buy dips and sell rips, because these headline news they're going to move the market. I mean, we don't have to pay attention to them, but they are market moving events. We've seen, especially on the tariff front, that have an effect to move the market 1% or more. So that's certainly higher than what the VIX is indicating and higher than historical moves in the S&P 500. So I think there's maybe some opportunity when this happens to sort of step your toes in, as fearful as that might be, and take the opposite side of that.
Yeah. Bottom line is scalpers are doing quite well. Momentum traders are having some trouble right now. I think there's some key levels. If I were a momentum trader, I'd want to watch and think, hey, there is some a catalyst here. We got the CPI. If we get above 6,100 in the S&P 500, 5,900 in the S&P 500 below there on that CPI, I think maybe there'd be some momentum to go one way or the other. Well, I want to look at that when we get to the S&P 500 chart real quick. But before we do, just one last chart here, looking at seasonality. This is a post-election year. This red line is what typically happens when the incumbent party loses. So we're ahead of that pace right here, of course, doing pretty good, I guess, in the market. But keep in mind, the middle of February here, you get to some trouble here. So we got a big week with CPI. This could be the start when things just kind of look a little bit south for the year before, and then after, get to the second half of March or the last week of March, then you start going up again. So just keep that in mind seasonally. This is a tough time of year. It's a tough week when it comes for economic data. It's going to be really critical. Now, this could be great CPI data. And let's see let's take a look at the S&P 500 chart, actually, Brian, here, to think what could happen. So this right here is like 6,100 level. We've gotten up to there a few times in the S&P 500, and just every time it just seems to sell off here. So, seems like there's really big resistance there. Some would say this is a call wall. Right here at this 5,900 level, it's kind of the same here on the downside. So I think this is we got to just consider this our range here, and just be prepared to trade it. Now, if we do get good data and we do break through here to the upside here, Brian, above the 6,100 level, I think there's momentum. I think we got the catalyst here. We got the call wall broken through. I think there's momentum to the upside if we are able to get through there. The same thing is true to the downside here. If we get underneath here, I think we're ready for this move. We've been kind of chopping around here for a hot minute. I think we're ready to break out.
Yeah, I think this is a great analysis, really. These are key levels, 6,100, 5,900. Watch these coming up over the next couple of weeks here, and especially the CPI and PPI numbers that come out this week.
Yeah, so bottom line is back to the sentiment data and the news that we're getting. The news is important, but I think it's going to be much more important if we see a close above 6,100 or a close below 5,900 in the S&P 500. That's going to be much more important. That's going to tell me, hey, the price is confirming this news. The price is saying, hey, this is something to latch onto. So that's really critical. The rest of the market's pretty similar to the S&P 500. We're seeing the same story playing out in the NASDAQ. But one bright spot, I think, for the economy and the market, Brian, is financials kind of leading the way. This is what I want to see for a healthy economy, healthy market. This means that companies are taking out loans, consumers are taking out loans, consumers are paying their loans back, and banks are doing good on all that spread. So financials just doing fantastic. This is what you want to see kind of in like the early mid cycle of a economy. So I think this is really good. Are there other signs out there that we're, in a healthy spot for the economy? It's mixed, to be honest with you. This right here is a transports index. You want to see this kind of making higher highs up here, railroads going out, moving goods and services back and forth to industries. That would be, really good for the economy. So it's not really there yet. So maybe there's room for growth in the economy if that is to to turn around. Really, really encouraging here from, this is copper right here, Brian, kind of encouraging here. You'd love to see it take out these levels. Copper is just a material that goes into so many things. So if we're building new things, copper is going to be going higher. Really, globally, it's important too. So it's a global growth component. And this up here, Brian, this is gold. This kind of is like a risk-off inflation play. Maybe that's not so good. Maybe it's good in the short term if inflation is going higher, but it's not so good maybe medium, long term, seeing it, the expectations for inflation are still going up, if not ramping higher. And then finally down here, this is like the risk on inflation trade is Bitcoin, is how I see it. Bitcoin's just kind of chopping around with the market.
I think it's interesting, gold kind of having a little breakout session there to the upside. That's kind of trended along with copper, which kind of makes sense because I think copper like moving higher, Joe, is probably bullish for just overall global demand, GDP growth. But, it worries me a little bit when you have gold and copper moving up together that there's some inflation factors. I think when it comes to Bitcoin, that's become more of I feel like a growth technology trend where it tracks more with the NASDAQ than it does anything else than inflation or anything like that, or maybe even, concern about geopolitical risk. But other than that, I think, when you look at the inflation picture, that is a little concerning on the gold and copper front over there. So, I mean, if the CPI numbers come in a little hot, and I talked about this pre-show when people were kind of tuning in, the 10-year note, if it trades back above 4.5, 4.6, I think that's a failed sort of sell-off, decline in interest rates, rally in bonds, a failed rally for bonds. And, that's one thing that would worry me, where things just sort of back the truck up on everything, so to speak. And the 10-year moving higher. Right now, the trend looks like it's going lower, and that's typically been bullish for growth stocks after a sort of little bit of a run up. But if there's a reversal here, if there's some hints of inflation as being spoken by copper and gold, then that's where I'm a little bit concerned that this market, in terms of stocks, the NASDAQ, the S&P 500, being able to sort of crack through those upper levels that you just mentioned.
Yeah, I mean, it almost seems like gold is expecting this, downtrend to happen.
Yeah,
really, gold is especially high when you add in like the strong dollar too. So really interesting to see how that plays out. That's a great point. We'll see what happens with the inflation data, of course. Just want to take a moment, middle of our show. Feel free to, drop us a line. You agree with anything that we said, let us know. You disagree, let me know. We're going to get into our trade of the week here, Brian. How do you feel about that?
This should be an interesting one. Trade Desk, right? Coming up, forward-looking PE, obviously very, very high, relative
not
to
as high as some of the other names.
True. So, I mean,
this stock, Joe, I take a moment here on Palantir. Like, one of our favorite stocks last year was Palantir.
Yeah.
We absolutely. Oh, thank you, Adam. We got one agreeer. I agree with your agreement. I'm not sure what, but yeah, I think everything. We're always right on everything, of course. We were big fans of Palantir last year, huge fans. We're looking at it, under $20 when we started following it. If you're watching our show, you would have seen us almost a year ago at 17 talking about their earnings at the start of the year last year, talking about how fantastic of a technology company it was, how the software is ready for the AI to make that next step. Palantir now, it's what is a $260 billion company. Its earnings are just fantastic. Their growth has been fantastic, but their PE is, I think it's like 400. And it's just really hard to have to justify it for me. Now, I love the company. I don't want to sell it, but it is a company that we've owned it for a while. It's something we're looking at trimming up here. I think it was just fascinating. I was just kind of watching some flows. I'm seeing retail trimming in Palantir, and the institutions are buying, which is absolutely fascinating. A year ago, all of the price targets were lower. Nobody understood the name, and retail was saying, "Hey, this is the future of AI." And retail had it right. And now it seems like the institutions want to pile on. The institutions have FOMO, and price targets are being upped. Institutions are piling on. I think maybe we're taking the other side here. Of you would consider us like institutions, Brian, but we're not. We're saying, hey, we'd buy more. It comes back to 70, maybe 65, 80. We'd be adding to our position, but up here, that's a lot. Now, I think the reason why institutions are piling into Palantir is because, hey, we know about the AI trade. What's the use case scenario for it? Well, absolutely excellent software is a great start. But for me, I think this is like the lowest hanging fruit for the AI. It's just gathering all this data, which is I'm going to move into Trade Desk here, gathering all this data and, implementing it and saying, what is a person's preferences? What do they like? What do they dislike? How can I feed them ads that they like better than otherwise? And I think that's where AI is going to have like the lowest hanging fruit for a lot of for a profit potential, is just targeted advertising for like a medium small company, can just advertise to people in their area, to people who like their product. And I think that's where Trade Desk comes in. I think it's just really, really fascinating to see. And, look elsewhere in the advertising world. Google did fantastic on their advertising. Meta did fantastic on their advertising. So I think the time is ripe for the Trade Desk to have a really good quarter here.
Well, yeah. So the question really becomes, Palantir is one of those where the growth, the PEs were high, but the growth potential it grew into those numbers, right? So people were
a lot more growing than you, but yeah,
and almost exceeded it. So the question is, can Trade Desk experience the same sort of growth and guidance here? If you look here, just reading the revenue growth guidance for 24%, I think it's got to start to exceed that to given these levels, but obviously the potential is there. Where do you see this growth continuing here, Joe?
I absolutely do. Let's just take a look at the chart reel here. 140, Brian. A lot of people have a price target right there. 140 was the previous all-time high. We're currently today right around 120, 121. In that range, a little bit higher today. Let me just repeat that. Bottom line, it's been a fantastic company. It's up like 60% year over year, something like that. Just consistently beating their earnings, and AI is like the name of the game for me. So their ad buying platform is phenomenal. I think this is the lowest hanging fruit. So here is my trade of the week. I'm actually going to do a butterfly on a weekly trade. Expires this Friday, Brian. I'm looking at the 125, 140, 155 butterfly. It's about $3 to get into it. Break even 128, 152 are my two wings that break evens there. Max gain, of course, is at 140. I will have turned $3 into $12 if we are pin at 140 on the week.
Yeah, so think about it. So $3 is about 2.5% of the value of the stock. So, obviously, if it doesn't happen, you'd be losing that. So kind of measure that up on sort of like the premium risk of how you want to put this on. But if you look at the risk reward payout in terms of an odds bet, for the earnings play, this makes a lot of sense, right? Because 128 break even, top profit 140. Now the butterfly would have to close right at that 140 level for max gains, but there's this bubble opportunity in between those areas of in between the butterfly outside wings that you're purchasing to make some money on this. So on a risk reward, like if I'm looking to make a educated bet with some edge, it seems like there is some edge here, especially when you look at the chart here. It's sort of kind of broken down. I would not want to own the stock outright, given that some of the technical levels in the chart here, but using options maybe to, as a play for back to the upside and sort of this, head and shoulders toppy fake out. This seems like the right play.
Yeah. So $3 is the most I can lose here. I'm not looking for it to bust out to all-time highs here. I'm actually just looking for it to go back to their all-time highs. If I were more bullish, I would have just done the call spread, Brian. That would have cost me about an extra $1.50 to do the call spread. So, maybe $4.50 for the call spread puts my break even up at 129.5. Cleaner upside. I know I'm not gonna be losing money or back, not losing my profit potential if we get above 140. But I'm just kind of not looking for it to race through 140. And 140 calls right now are about a 110 vol, Brian. So just looking for an opportunity to sell some volatility, because the 125s aren't cheap. They're pretty expensive because people are expecting a big move on earnings here.
All right, well, let's see if this will play out this week here, Joe. I like the trade. I like the risk reward. Again, I'm not a buyer of the stock given the lofty PE here. Can they come in and prove their growth correctly? I think the butterfly is a much better way to sort of play to the upside in a range-bound upside move. So a bullish play, but one that's not explosive, where, like you said, Joe, we're making new all-time highs. So
this will come. Can we real quick look at last week's trade, and then we'll say goodbye? This was last week's trade. We did, this is TT. This is Amazon. We did Amazon ahead of earnings. Amazon was about at 240 on Monday, pulled back down here to 230, give or take right now. This trade went from 650, where we collected, to 850, but it really was a stock replacement. If we were holding Amazon at 240, it would have been down $10 on the stock. So I see it as rather than losing $10, I've now lost $1.15. I think I like being short that Jan 300 call. I think I'm just going to take off my risk reversal here, the 220, 240 put, turn that into Amazon stock and keep my short call on, and wait for the next step.
Yeah, just correction, down $2.15, not at $1.15, but still, that's what 20%, a little bit more than 20% of the move only to the downside relative to the stock. So this had a very small, like what we option traders call delta, right? Meaning the amount of movement of the option price relative to the movement of the stock. And in this situation, if I'm only getting 20% risk to the downside on a risk reward where I had all of the upside above 240 all the way to 300, this played out well. So the direction didn't work out as well. I might be inclined to just wait a little bit longer, Joe, on this to see how this plays out. But obviously, as time passes in this risk reversal, the February sort of bakes off and expires. Now you're left with this short call. So in that sense, I kind of like what Joe's doing here is he's going to turn the risk reversal. He's going to buy the stock now at a lower value than where it was before. Hold on to that short upside call. And, then he's got, he can make money all the way from here all the way up to 300 by being long the stock, and recover, a couple dollar move back to the upside. And he's recovered what was lost on this option trade spread. So, and the stock wouldn't be back at the levels that it was before earnings. So this kind of worked out. This is why we use option trades rather than stock heading into earnings plays. And, we continue to update you.
Another option is just look at another risk reversal out in March, get us a little bit more time here. We talked about how February can be kind of like a week or month. It's just kind of going with our philosophy for this year. Like we expect there to be volatility. We expect the market to be higher. So what happens when there's volatility? Yeah, we're going to have some lower drops in the market. If the Amazon does fall, we want to be in a position to buy it. So we make this a March put spread. We'd love to buy Amazon down at March risk reversal. We'd love to buy Amazon down at 220, of course, and just be in position to get ready to sell it if it does have a rip too.
Yeah. So volatile times, call for making measures and using option trades to sort of limit risk. And this is alternative ways to play the market, hopefully risk less to make more. We're here every week giving a trade idea. Make sure you tune in, go to equityarmorinvestments.com, sign up for our subscription on our trading zone section to get continual updates straight to your inbox via email with the exact spreads that we're putting on and when we're taking them off. And so continue to get those updates here, Joe. It's been a great show here. Make sure you tune in every week at 10 a.m. Eastern. This is our new time on Monday. get in right when the markets are going to start the week. You don't want to miss anything. And hope to see you every week here on Monday morning. Joe, anything else to leave with everybody?
Yeah, I think you almost said it. You're very close. You said volatile times. I think volatile times call for volatility managers, I think is the way to go.
There you have it. Tune in every week on the Trading Zone, Monday, 10 a.m. Eastern. We'll catch you next week.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.